Hi, everybody. My name is Sari Holtz, and I am very, very excited to present this webinar about women in Forex trading and in stock trading and investing. It's a topic that's really, really close to my heart. And thank you all so much for joining me. Hold on. Just a quick risk disclaimer that my company where I work, Daily Forex, is not responsible for any damages resulting from any of the tips or suggestions that I provide today. I will not be providing any actual stock tips today, so you don't have to worry about that. This webinar is free, but you may be contacted afterwards by a broker who wants to help you start on your investing or trading journey. That's a choice that's totally up to you, whether you want to participate or not. And just be aware that any trading can result in risk. Okay, so just a little tiny bit about me. My name is Sari Holtz. I've been working at Daily Forex for the past 11 years. I work as a market analyst and also as a relationship builder, working directly with the brokers that we work with to help provide the best trading experience for traders across the world. I have a degree, a bachelor's degree in politics and a master's degree also in politics. So my specific area of expertise, I guess you could say, is focusing on how political events impact the economy and impact the way the markets move. That's not what I intended to study. It just worked out that way. And now I really love reading the news and seeing how it impacts the financial world. I'm also the mom of 5 kids. 3 of them are teenagers and 1 is about to be. So I have my hands full there, but I don't let that stop me from working and stop me from investing and from taking full control over my financial future. And I hope the goal of today is to try to inspire you and to teach you why it's also a good idea for you to be involved and to take part in your own financial future. Okay, what we see in the financial world is that 2/3 of all traders are men, and only 1/3 is women. And that disparity and discrepancy becomes more obvious when we're looking in the professional world. So for example, if there's 2/3 of men and 1/3 of women taking part in private trading, in the venture capital world, only 4.9 of professional venture capitalists are women. And in the private equity world, the percentage is a little bit higher. It's a little bit under 10% of female professionals in the financial professional equity world. So there's a huge disparity, and we're going to talk a little bit about why women are hesitant to get involved and what we can do to change that narrative and bring power back to the women, I guess you could say. In his famous book series, Market Wizards, which took about 14 years to write 5 books, Jack Schwager interviewed 75 traders in the course of his books. Only 1 of them was a woman. So that itself should give you an idea of how underrepresented women are in the financial world. And by no means am I saying that everyone who takes this webinar should go out and become a financial professional, but I definitely want to bring it down to the daily level or the monthly level and see what we can do for our own personal finances. Just as an interesting side point, in Daily Forex, we also did a series. At the time, it was called Forex Figures. I started it when I first came in. It was a blog back in the heyday when blogs were really popular. And I interviewed a bunch of Forex traders. Forex, by the way, is short for foreign exchange, which is talking about how different currencies interact with each other. Is the dollar stronger? Is the euro stronger? Et cetera, et cetera. And at Daily Forex, I interviewed a bunch of traders. In the scope of 5 or 6 years that we were doing the project, only 2 were women. One of them was called the Trading Goddess, which I thought was cute, but perhaps a little anti-feminist. And I'm not a feminist, it was just an observation. But they were both brilliant, and there's absolutely no reason that women can't be more involved. The other one, by the way, is named Kathy Lean. She's regularly featured in a bunch of financial sites, including CNBC and Daily FX, and you can look her up if you're interested in following other traders in the female traders in the currency markets. There are many reasons why women aren't trading, some of them obvious, some of them a little bit less obvious. The first is lack of knowledge. Obviously, people aren't born knowing how to invest and how to trade. By the way, in a few minutes, we'll speak about the difference between investing and trading. For now, we can use those terms interchangeably. Most women don't know what to do. They don't have experience, even if they do know what to do. For example, I'm well trained in understanding how the markets work, but until I actually placed my first trade, I didn't have any experience in. I was nervous that the thoughts that I had might not translate into real life or into real profits. And the third is lack of time. Obviously, women, especially employed women, even housewives, they're busy. They have stuff to do. They're taking care of their family. They're taking care of their jobs. Frankly, we're all exhausted by the end of the day. So to add something else onto that pile sometimes feels overwhelming and possibly unnecessary. Other reasons why women don't trade is because of fear. You know, what if I lose my life savings, for example, which is closely tied to lack of confidence, but not entirely. Studies show that men have more confidence than women because they have more testosterone than women. So one could argue that biologically, women are less inclined to trade because they're less naturally inclined to have confidence. And the last reason why women are not trading generally is because women tend to want to get help if they suffer from fear, lack of confidence, lack of experience, lack of knowledge, all of the things we discussed before. It might prompt a woman who's, of course, very smart to say, okay, I don't know this topic. I want to ask for help. But of course, help requires time. When am I going to call someone for help? During my workday? No, I don't have time. When my kids need me? No, I don't have time. So it becomes this endless cycle or catch-22 of, I want to learn, but I don't have time, so I just don't do it. And that tends to be exclusionary towards women. But there are many reasons why women should be trading. The first one is because women tend to live longer than men. The current life expectancy for women in the United States is 81 years old, but men, their average life expectancy is only 76, which gives women a 5-year edge on men. So they should know, number one, where their money is. Number two, how to plan for a longer life than their husband. According to Worldometers, which is, you know, the preeminent source for statistics these days, especially since Corona, in Hong Kong, women live for 88 and a little bit years, 88.17 years to be exact, and men only live 82.38 years on average, which is a lot of years. So you have to plan for this gap and know what to do, presumably not just using the money that your partner or your spouse left you behind. Also important to note is that women's life expectancy is longer than men now. By the way, even after Corona threw a little bit of wrench in the statistics, but the life expectancy for people across the globe is inching up each year by 0.25% or so. So if the average life expectancy for a woman now is, let's say, between 81 and 88 years old, if you're young, if you're in your 20s, 30s, 40s, it might be 85 or 90 or even higher by the time you hit that age. And so you want to be financially prepared to enjoy your years, especially the later years when you have more medical bills or health care or long-term care bills. You want to prepare for that accordingly. Another reason why women should trade is purely a math game. If you invest a specific amount of money per month, every month, if you take, let's say you're saving $500 a month, every month from the time you're 25 till the time you're 65, you'll have put aside $240,000 in cold hard cash. That sounds like a lot of money, and it is. But with a 3% inflation rate, your $240,000 isn't really going to get you that far. In fact, it'll be worth way less in 40 years than it is now. So actually, keeping your money in cash is actually causing you to lose money. But let's take a look at another example. If you save $500 a month for 40 years, the average return from the S&P 500, which is the largest and most liquid index on the New York Stock Exchange, is 7%. If you were to invest every month in the S&P 500 with your $500 for those 40 years, on an average of 7%, you'll be making or ending up with $1.2 million at the age of 65. All that from just stocking away $240,000, which is pretty significant. It's a 5 times return on your investment. And if you wanted to be, let's say a little more conservative, let's say the S&P 500 is too risky for you and you were going to put it in bonds or some other type of conservative asset at 3%, you would still end up with $500,000 compared to your cash, which is equivalent to sticking it under the mattress, where you'd end up with exactly the same that you put in of $240,000. Okay, it is never too late to start trading. And by the way, this was just for the sake of an example. You don't have to put away $500 a month, obviously. Of course, that's great if you can, but if you can't, we'll talk about in a few minutes, starting with whatever you can and compounding it through investing over the course of the next however many years you have until retirement. Okay. We talked about why women are not trading. We talked about why women need to be trading. But I want to take a minute to talk about why it's better for women to be trading than men. Studies actually show that women who trade and invest have 40 percentage points better returns than their male counterparts. You might be curious why. I know I was when I saw that statistic. It's actually recently been published both by the New York Times and the Financial Times in a couple of studies about the same topic. But women have a lot of intellectual and emotional advantages over men. For one thing, they're less impulsive. A man might say, oh, hey, Tesla's really popular. I'm just going to buy Tesla stock. Or, I like Ferraris, or I like, some other technology that exists. I'm just going to buy that stock. I think it's a great company. He may also be tempted to sell it. Oh, my stock went up 2% in a day, or 10% in a week, or 10% in a year, for example. A man might say, okay, I've won. I can give myself a good pat on the back. I profited, and now I'm going to go out of the market. But a woman, studies show, tend to do more research. They're not as impulsive. They'll look at a stock or an asset before they purchase it, and they'll make more slow and rational decisions before selling an asset. Are they selling it at a loss? Is there a reason? Is there a tax advantage? Should they wait and see if it'll rebound and sell it as a gain? A lot of emotional factors go into it, especially fear. But women tend to fear on the side of caution. I'm not going to sell now because what if I lose out? As opposed to men who tend to want to pursue the glory of the win or just change things up, and they tend to be more impulsive. Women also tend to plan better, which is highly correlated to impulsivity as it happens, but they tend to research things better so that they know what they're getting into. Obviously, nobody has a crystal ball, but I mean, the research speaks for itself. Women as a whole perform better than men when it comes to the markets. Okay. A study recently by Fidelity proved these exact results. And this study was also widely quoted in the media and by other financial analysts who are trying to encourage women to get in on more of the action. Before I move on, I just wanted to also mention that, going back to this slide for a second, actually, that in the scope of the period between February 24th and March 18th, 2021, men's investment activity in the United Kingdom increased 165% more than in the same period last year. Again, that's from February 24th to March 15th, 2021. 165% improvement, likely because people weren't trading during that period, because that's exactly when Corona broke out in 2020. And a lot of people were sitting to the sidelines. But in the same period, women only increased their trades by 129%. And this shows that women are trading less. And that's well known, you know, across all the brokerages. Fidelity in the United States, Vanguard in the United States published similar numbers. Women tend to trade less, up to, you know, 25% less than men. But because they're trading less, their results are better. As it happens, when you're trading, the long-term window tends to be better than the short-term window in a lot of cases. And because of that patience and that desire to keep things stable and not to make impulsive decisions, women trade less, but they trade better, period. Okay. So I've been throwing around the words investing and trading during the scope of this past couple of minutes. So I just want to take a minute to clarify what the differences are between investing and trading. Investing tends to be putting your funds in equities, which is shares of a usually shares of a company, but not always. It could be a commodity like oil or gold, or it could be cryptocurrency, for example. And it tends to be for the longer term, which could be a month, a year, 10 years, etc. When it comes to investing, mostly you can only buy shares. Obviously, if you buy them, you can sell them. But when it comes to trading, which I'll discuss in a minute, you can also short the market, which means if you think that the price of a share is going to go down, you can place a trade that way and profit if the price goes down. But when it comes to investing, you're basically only buying shares. The advantages of investing are that it's almost like a set it and forget it type of thing. You put your money in and then you just wait for it to grow. Okay, so maybe it'll have a couple of down days or even a couple of down months, but hopefully if you've made a wise investment, which of course you will because you're a woman, the investment will go up over time. As I mentioned earlier, usually investing is only with one asset class, but it can be for others, especially if you're trading indexes, for example, of cryptocurrencies, let's say. It tends to be more consistent and less emotional, especially if you're just setting it and forgetting it, and if you have long-term goals. Investing is a great starting point for people who are just starting out, both women and men, who want to get their feet wet but don't have the risk appetite for short-term moves in which they might lose money. The negatives of investing are that it could take time. Like I said, you know, you don't always see, when you're buying stocks, for example, you don't always see that the asset moves so much in a day or even a week or a month. It could take a year or even longer, depending on the type of asset and the type of stock that you buy. Likewise, investing is highly correlated to bull or bear markets. A bull market means when stocks continue to go up, and bear markets are when they go down. If the market is in a long-term downtrend, it could take you a very long time to see a profit on your investment. However, As it happens, we've been in a mostly bullish positive market for the past 12 or so years, except of course for a small dip during the Corona period at the very beginning. But now the markets are super high compared to where they were in February and March 2020. So for anyone who is patient, which women tend to be as traders and as people, you know, the potential for gain is great in the long run. Likewise, investing, because it takes a long time, is not as exciting as trading, which I'll discuss in a minute, where you put the money in and you can see your profit in 5-10 minutes, or, you know, a day or a week. Okay, trading, as compared to the opposite of investing, is available for a lot of different asset types. You can trade currencies, you can trade cryptocurrencies, you can trade metal, you can even trade wheat, commodities, you know, exotic commodities like wheat and lumber, basically really almost anything. There's a lot more options in a way, because you're trading it, the asset, against the price of something else. When you buy a stock, for example, let's go back to Tesla as an example. You buy Tesla and the price is, you know, $1,000 per share. It's actually higher now, but that's irrelevant. Let's say it's $1,000 per share. That's the market price. But when you're buying wheat or oil, for example, you're buying it against the price of the dollar usually, and therefore there are a lot more factors at play, which makes the asset more volatile. When it comes to trading, you can place a trade, like I said before, in the short term and the long term. So you can place a trade for a minute or 2 minutes or 10 minutes or a week, or you can place a trade for a long time. You can also make a long trade or a short trade, which is not to be confused with long or short term. A long trade means you believe that the price is going to go up over time. So you're going long, you're buying the asset in the hope that it'll go up. A short trade is the opposite. It's when you buy an asset with the thought that you think that the price is going to go down, and you can't make this type of trade when you're investing. It's only relevant when you're trading. The advantages of trading are that it's not correlated to a specific market cycle. It's not usually related to what news items that are moving the price of an asset. It's based on like what's going to happen in the next couple of minutes or days, which is usually based on technical analysis and where the charts are going, which is a topic we can discuss at another time. When it comes to trading, a huge advantage is that if you get in and out quickly, you can see your returns quickly, which is great if you need funding right away. You can also use leverage when it comes to trading, which means, in short, and this is again a topic for another time, but if you have $10 that you want to invest and you're using leverage, you can get 1 to 10 leverage or 1 to 100 leverage, and the brokerage that you're using will let you trade as if you have $100, even if you only have 10. This can help you make more profits quickly, but as a warning, it's also dangerous and you can lose your profits more quickly. The disadvantages of trading, the cons, I guess you could say, is that it's harder to learn because you have to pick it up more quickly because the trades will open and close in a shorter amount of time. So you don't really have time to let it sit in case you've made a mistake or it goes in the direction you didn't want it to. Another negative, I guess you could say, is that the markets are much more volatile if you're looking at a short time frame. So you could lose your money more quickly if you're not careful. And also because you're doing it for something that you want right now, you might be subject to more intense emotions like, oh my God, what should I do? Should I take the trade out now? Should I leave it in longer? And that could mess up your trade or impact your profitability, as we discussed previously. Okay. So I hope I've given you a little bit of an understanding of why it's important for women to begin investing and why women really make good investors, even if they're scared and even if they don't understand, and how they can rectify that. So I just want to take the last few minutes to talk about the roadmap for how to get started. The first one is to decide how much money you want to put away each month for your investing purposes, and start by setting that up. I have an automatic withdrawal from my checking account into my investing account. The next thing is to research the assets that you might be interested in. It might, again, be something, someone gave me a tip when I first started of, look at the products or companies that you're interested in. You like to shop at Target, look at Target stock. You like to shop at your local grocery store, whatever grocery store it is in the country that you live, try to look at that stock and see if that's a popular option for you. The most popular way to go is to use an index fund like the S&P 500, because that takes a basket of the most popular stocks that tend to do well over time, as we said. And that will mitigate your risk, because you're basically taking a lot of stock instead of one. So if one goes up and the other doesn't, you could still be in the green. And the next thing to do would be to invest in the same stock every month or at regular intervals, even if it's not every month, just so that you can cost average your investing, so that even if the stock price goes down a little bit next month, the next month it'll be higher, so you'll end up working it out so that you can profit from that. Okay, that's a really short version. I hope we'll have another webinar or 2 or 3 to really talk about how to implement some of these strategies, so that you can know what to do and feel confident and overcome that fear that's so innate. The next thing to do is to learn about the markets and different strategies and trading styles. Open an account and practice. A lot of brokers let you practice the strategies that you have. You can put in fake money into an asset that you want to watch it for a week or a month and see how it went. And then you can see if that's right for you. Of course, if it went well, then you'll be kicking yourself that you didn't put real money in, but at least you'll feel confident that your decision-making process was healthy. That is about it for now. Can't believe it's been a half an hour. There's still so much more to discuss. You can learn more if you want to get real nitty-gritty information, webinar videos and quizzes to test your knowledge, and articles at fxacademy.com, which talks about a lot of currency trading and also crypto, and I think a little bit about stocks. And of course, at dailyforex.com, you can read my market analysis there. I write a couple of times a week about interesting movements that are going on in the market, as do some of my amazing colleagues. And you can always contact me in my personal email, sari@dailyforex.com. I hope that you have been inspired by this to take control of your financial future. And I hope that you'll join me in the future for more webinars where we can really get into the details of how to set yourselves up and what you can do to become more financially secure. Have a great night.